Hello, everybody. Welcome back to Beer and Money. My name is Ryan Burklo. And on today's episode, we're going to be talking or actually finishing up the conversation that we've been talking about around factors that impact your financial success. So, in our first episode, make sure if this is the first episode you've started listening to us, go back about two more episodes. We've been talking about 5 factors that impact your financial success. First factor was amount of wealth. The second factor was location of your wealth. Third factor was the true liquidity of your wealth. And today we're going to be talking about distribution of tax status. Like, what is the taxes of the income that you're distributing to yourself? So that's the agenda for today. The takeaways on these episodes is really for you to look differently around where you're putting your money and the reasons why, so that you can have the life that you want. Okay, because in the end, I have yet to meet a person that they're saving money and they don't want that money to come back to them in the most efficient manner, being low risk. So, low risk of outliving your money, low risk of high taxes. They want the highest net income coming back to them, right? Maybe some factor of legacy planning, and they're wanting to live the life that they're accustomed to. So, these factors are important and they're not spoken about. So I hope you've enjoyed the last couple episodes. Let's dive into distribution tax status. Before I do, what I want to do is I want to kind of go over with you what we've really been discussing. So I'm bringing up Living Balance Sheet here. Again, if you haven't checked out our YouTube channel, check it out, because I think that the visual side of this really helps with the grasping of what we're talking about. I'm doing my best to make sure that from an audio standpoint, I know if those of you listen to me in the car, doing my best to make sure I'm explaining this well, but check out the YouTube channel as well. So what you're staring at here is a sample client's financial balance sheet. And this is a client that's about to head into retirement, right? So they've got $75,000 in savings, $500,000 sitting in investment accounts, $3.1 million in retirement accounts. And as you can see of the $3.1 million, $3 million is in the traditional 401k. They've got their home. They've got a small mortgage left, $250,000 mortgage. They own a car. The reason that they've been building this wealth is to eventually have these assets turn on an income stream for them, so that when they no longer want to work or work as often, they've got a subsidized income coming to the door, right? And when you get to retirement, either forced or voluntary, you want to make sure that the highest net income is coming to your checking account from your assets. And what's really interesting about this conversation is most of the time, the focus is around this number here, the amount of wealth or your net worth, or if you want to focus on the assets, the $4.7 million. And as we spoke about in the first episode of this series, this is an important number. Obviously, if the lower this number, the harder it is to turn on an ample income stream. But it's not the most important number, because there's an aspect of where your money is. Like, if you could have a bunch of assets and have a bunch of money in an asset that doesn't kick off a high income stream. So is that an efficient use? Right? So it's really important to understand that. Today, we're talking about the distribution. So here's their assets. This is their main home, real estate, right? So unless they're wanting to sell this home and go to a different home, there's really not much to do here. Now, they could possibly go down and maybe erase their mortgage. That's not for today's conversation. It's more of the assets that they're going to be using to turn on the income stream. And so they've got this retirement account and this investment account, and to a small degree, this savings account. It's that liquidity that we've been speaking about. So put yourself in their shoes for a second, right? You've got, I'm going to round up here, $4 million of assets that you're wanting to turn on into an income stream when you go to retire. You don't know how long you're going to live. You don't know how long your spouse is going to live. You don't know what health concerns might be there, but you do know that what your bills are. You do know that you want to take vacations and spend time with your family. Maybe you do know you want to leave some sort of assets behind for your grandchildren to pay for their kids' education, or maybe you don't. You've got these pieces in mind. So here's the question I've got for you. You've got these assets. How much net is coming in your pocket? So after taxes. And as you can see, like most of our clients, before they even meet us, they understand what's taxable and what's not, right? So we've got partially taxable income, that being the savings, or partially taxable assets, I should say. That's the savings accounts and investment accounts. You've got tax-free income, and that's with the Roth account. And then you've got the fully taxable income, and that's coming from the traditional retirement accounts, 401ks, IRAs. Now, as you can see, most of their money has been put into that traditional IRA 401k. I'm not here to say whether or not that was right or wrong for this particular couple, because I don't know their ultimate goals outside of if we're now going to turn these assets into income, how are those assets going to be taxed? So we just explained how they're taxed today, but are you looking at how they're going to be taxed tomorrow and how they're going to be taxed in the future when you start to pull them out? And so oftentimes when we're sitting with clients, we have these questions and we say, okay, you're about to retire. What are you doing? Like, what's your lifestyle look like? And most of them say, well, similar to today. I'm like, no, tell me more. What are the details of that? You could go stereotype, like I'd like to go golfing, or I'd like to vacation or travel the world. That's the stereotypes that we often hear. But in reality, and some of that is in reality, the reality of it is every day just became a Saturday. I don't know about you, but my most expensive day of the week is Saturday. It's when I've got all the time I want, and that tends to be where I spend the most money. So your early years of retirement is normally when you spend the most money from your retirement nest egg. So if with that in mind and everything, just income in mind, what does this really look like? And so when we sit down with our clients, we take them through. Imagine if you had someone going through your assets and they started showing you how each individual account is going to be taxed today. And then they'll show you how those each individual accounts grow. And then they also take you to how each of those individual accounts will be taxed, meaning the dollars come into your pocket when you retire, how they'll be taxed. And imagine if we could create this pie chart, where the pie chart is like this. Any tax-free money coming your way would be in green. Any partially taxable money coming your way would be in yellow. And any fully taxable income coming your way would be in red. If you could draw up that pie chart, what color would you most likely, what color do you want to see that is the predominant color in that pie chart? The answer is green, tax-free. Like no one's ever told me otherwise. And so we take them through this. And so when we're going through this, we can point out, what their asset profile looks like. How much is in retirement accounts versus investment accounts versus real estate. We can show them the liquidity of these accounts moving forward, from a market-based asset to just pure liquidity on access to the money. And then we take them to the distribution tax status, the whole point of today's conversation. And I click on this, and then we show them the pie chart. And as you can see, this pie chart is not what most clients want to see. Most of this pie chart, for those of you who are not watching on the video, is red. Like they've got maybe, 7% of the money, and not even that, 5% of their money is tax-free. Another small chunk is partially taxable, but the vast majority of their money is fully taxable. And when that's fully taxable, what does that mean in terms of net money coming to you? Obviously, that's higher taxes. And so the whole point of today's conversation is, are you thinking with the end in mind? Ideally, yes, we would love to be all green. Not normally possible to have an all green pie chart. However, wouldn't you want to see some balance in this? Like, wouldn't you want to see maybe a quarter, or a third in this example of partially taxable, fully taxable, and non-taxable? Most people I ask that question to say yes. That is all what you're doing today. I know many of you are not in the stage of about to retire. So you're putting money or dollars into these different accounts. How are you thinking with the end in mind? Do you have someone guiding you, walking you through this? CPAs are really good at helping you with managing your taxes, really from the rearview mirror of the car. They're looking at, what did you make this year? What are the tax deductions and laws in place to make the tax bill as small as possible this year? How are they working with you out the front windshield of the car? Right? Meaning 30 years from now, 20 years from now, when you're turning these assets into income, how are they helping you there? And I think that's where Alex and I do a great job. And there are other advisors out there as well that are looking at that type of planning work. So that's today's episode. Look, we started this podcast to help you think differently about your money, to help you build the lifestyle that you want and help you really have a more stress-free life around money. Head over to beerandmoney.net, and at the top of the page is a contact us page. If you got anything from this, I'd love to hear from you. I'd love to go contact us, shoot us a quick email and say, Ryan, I said about X. I didn't think about my money from the standpoint of turning the income stream on and how it's going to be taxed. That was very helpful. I'd love to hear from you from that standpoint. I'd also love to hear from you. What did we not talk about that you want us to talk about? So it's a great way to engage with us. I hope this episode was valuable for you. As always, cheers.
This podcast is for informational purposes only and is not to be construed as tax, legal, or investment advice. Although the information has been gathered from sources believed to be reliable, please note that individual situations can vary. Therefore, the information should be relied upon only when coordinated with individual professional advice. Guest speakers and their firms are not affiliated with or endorsed by Park Avenue Securities, Guardian, or Quantified Financial Partners, and opinions stated are their own. Guardian, its subsidiaries, agents, and employees do not provide tax, legal, or accounting advice. Consult your tax, legal, or accounting professional regarding your individual situation. All investments and investment strategies contain risk and may lose value. This material is intended for general public use. By providing this content, Park Avenue Securities, LLC is not undertaking to provide investment advice or a recommendation for any specific individual or situation, or to otherwise act in a fiduciary capacity. Please contact a financial representative for guidance and information that is specific to your individual situation. Ryan and Alex are registered representatives and financial advisors of Park Avenue Securities, LLC. OSJ 200 Market Street, Suite 1850, Portland, Oregon 97201. Phone number 503-221-1226. Securities products and advisory services offered through Park Avenue Securities, member FINRA, SIPC. Financial representatives of the Guardian Life Insurance Company of America, Guardian, New York, New York. Park Avenue Securities is a wholly owned subsidiary of Guardian. Quantified Financial Partners is not an affiliate or subsidiary of Park Avenue Securities or Guardian. Ryan Burklo, CA Insurance License Number 0K24924. Alexander Collins, CA Insurance License Number 0H24806. Pinpoint number 2024-177350. Expiration June 2026.